Well, and then talk me through on like investing actually in these, you know, catalogs or compositions on the publishing side. I mean, how did you go out and well, first off, how big is your fund, and then like how did you go out, get all that money, and then focus on telling these investors that hey, like this is gonna provide a huge return, right?
Sure, sure. So, for context, we're sort of in the middle of October 2022, and the markets right now are being ratcheted up, pretty consistently each month. The Fed, each time the Fed is meeting, they're ratcheting up the interest rates, and so the use of debt right now is becoming questionable, is whether or not it makes sense to use debt. And so our fund, our initial fund, I was like, look, I don't want to get out over my skis. Let's raise 10 million bucks. And we had a relationship with a senior banker at a big bank that has a focus on entertainment that said, we believe in what you're doing, and we've vetted you for other projects. And so we'd be willing to underwrite this. But the rates are such that it really decreases our cash flow. I'm going to get into a little bit about what cash flow and the multiples and this sort of thing, but it really decreases our multiples or impedes our ability to take a lot of cash flow. But the reason why one might still choose to use debt now is such that it'll increase the total fund size, such that when it's liquidated on the back end, there's more to be split up.
Oh, interesting.
Does that make sense?
Yeah.
So, one of the things that some advisors were saying, the fund you're raising is too small. Like you should just, you should raise more money. And I just disagreed. I was like, I disagree, much to the same sort of in the same way of testing an idea with a fake Airbnb ad that $10 million in the grand scheme of things is a very, very small fund. But I feel like if we can go out, we're unproven as fund managers at this point. And so what I believe is that if I can go out and sort of show my mettle with a small fund, that fund 2 through 30 is going to be really easy, and we can start to ratchet up, the size of the fund and the volume. Again, part of our thesis is to systemize the acquisition process such that the acquisition cost or the transactional cost goes way down. And we've done that. And so part of the thesis is onesies, twosies, that they can be purchased at a relatively low multiple, 5, 8, 10, 12x, annual revenues. And then as a collective, if we've bundled, as it were, if we've rolled up, $15, $20 million worth of those, and then they're all clean and they're packaged up real nice, and there's no conflicts in the data, and it makes it very, very easy for a buyer that we can package that up, and that as a collective can then be sold to the likes of a Roundhill or a Hypnosis for a 15, 17, a 20 multiple. And so we're buying at 10 and we're selling at 20. And then there's that delta is where we get our cheese, as it were.
That's insane. I mean, just how it all works. Like, there's so many ways to invest.
Totally. I mean, Hypnosis is a public company. They're listed on the London Stock Exchange.
I didn't know that.
You can buy into that company, and you can enjoy the proceeds of that company, and the roll up industry, as it were, is long and proven that we're gonna go out and I met a guy recently that was buying up lawn care. He was rolling. He had a fund, and he was buying up and rolling up small lawn care companies to between 500 and 2 million, 500,000 to 2 million. He's going to roll them up and create some synergies across them, digitize them all, clean them up, some economies of scale, and then once he's got $20 million worth, it's not only is it generating a lot more revenue, because you only need one office manager for all those companies instead of them each needing an office manager, as an example. But then that company with a bit more heft and a bit more breadth, that it can be sold at a higher multiple on the end. And so that's sort of a proven roll-ups are a thing. And so we're sort of applying that same sort of idea to music. And we're finding these smaller catalogs that are important music that deserve the attention and need a good home, deserve a good home, and kind of bundling them up with the hopes of having some sort of liquidation event. Ultimately, and this is part of, I don't know how this will work, and we're kind of we're wading into these waters now, but ultimately, I believe in it's sort of what astute investors and families have done forever, is buy assets that are good and important, steward them appropriately, refinance them in a tax-advantaged way, and hold them forever and never sell them. And so you can refinance and pull money out as markets will allow and when interest rates are attractive. But ultimately, I would prefer to find assets that we might be able to enjoy forever. That one of the things that's great about copyrights is that they're, the longevity of those is incredible.
That's what I was going to say. You don't need to sell, right?
You don't need to sell.